All right. Hello, ladies and gentlemen. It is May 9th, 2023, 9:23 a.m. in the morning. And today is the day after Palantir's Q1 2023 earnings. I hope everyone has had a good day. Obviously, earnings were not the worst, I would argue. Not the worst. And, the stock market has respected it. We'll see where the stock ends up and kind of how it all plays out. But earnings has been pretty well. I mean, I can't lie about it. There's been a lot of analysis about earnings. The biggest thing is that we were gap profitable yesterday. I had a very large live stream and Finance Junkies last night. We kind of broke it down. There's a lot of good things on earnings. And for now, it seems like the tide may be shifting when it comes to Palantir. I don't know how the stock's going to do. I don't know if it's going to maintain $9 or whatever it's at right now. But I do know that things may be shifting. And that's the cool part. Philip Rizzo, what's up? Jam, Mr. Russo, Nicholas, Sethi Roth, Geis, Meow Now, Luck, Depend, good morning from Santa Barbara. Ebot, what's up? Kane Frost, David, Ray, CNBC just talked about Palantir, Kramer's. Well, eventually he's going to have to come around. Hopefully he keeps hating Palantir. Ramu, what's up? Shintoki, I hope the stock crashes, want to buy more. Good morning, Goal, Everclear, Bay Ray. Iceman, JJ, wrong mic. Oh, thank you. See, this is why the audience is so important. It probably is the wrong mic. Yep, you're right. Boom. There we go. This should be the correct mic. All right. They showed the clip of Carp saying they want to take the whole AI market. Man, that was an epic clip. Yeah, look, we had Palantir earnings. I will come out with more content later today and throughout the entire week, analyzing and breaking down these earnings. But it was good, man. It was good. I mean, just to give you guys some pretty basic numbers for Palantir. GAAP net income of $17 million. They are GAAP profitable. Total U.S. revenue, total revenue grew 18% year over year to $525 million. Analysts were expecting $506 million. GAAP income from operations, meaning money from the actual business, of about $4 million. So they actually made money from the business. They didn't just do, financial engineering to get to GAAP profitability. Customer count grew 41% year over year. Cash from operations, $187 million. Adjusted free cash flow, $189 million, representing a 36% margin. And then cash equivalents, and short-term U.S. Treasury secretaries of $2.9 billion. That means they have $2.9 billion cash, which is up from $2.6 billion that they had in cash before. So, look, it was good, man. It was good earnings. I will break it down even further, but it was good earnings. Stock right now is at $9.17. We're up 18.48% pre-market. If you put a gun to my head and said, where do I think the stock's going to go? I would say it's not going to maintain $9 because I still think Palantir is not respected enough by the market. Now, we did have two analysts, Jeffries and someone else, raise their price targets to $10. Okay? So up from 7 to 10, which means theoretically, if we're just going based on analyst expectations, we should be able to see some sustaining of 9 if we have two price targets that are raised to 10 from the analyst community, which I would love, but I don't know. I don't know if it's able to do that. Now, there's two options the way I see the stock playing out, okay? Number one would be that there are certain people that took a look at that earnings call, took a look at the valuation, took a look at kind of the AI arms race that is going on and decide, you know what? This is a stock that is undervalued. I'm willing to pay a premium for it. I see that there's a community around it. I'm going to, put some money into it. And that is an inflow of capital that comes in. Palantir up now at 19.5% in the pre-market. And that helps us sustain above 9. If we could just sustain above 9 the whole day, I would be more than happy if we could just sustain above 9. The other avenue is that a lot of people are like, this is a great run up. It's worth taking some profits because eventually the market will recognize that this is worth it, but it's not now. And because the market's not going to recognize that immediately, then I should be selling the stock and take my profits and move on. And I'll come back in at a lower price when most of Wall Street understands it. There's not a lot of institutional investors yet, and they're going to want multiple quarters of GAAP profitability, and so I'll wait. The other one thing Palantir is going for it is S&P 500 inclusion. Like, we're going to get in there now. If management is guaranteed we're going to be net income positive, on a GAAP basis, then we meet all the other criteria, which means by early 2024 or latest mid 2024, we're going to get into that S&P index. And so eventually investors will come along. So I think there will be a sustained rally. I just don't know if it's today, because obviously, the S&P 500 is not happening tomorrow, but it is going to happen. And that's going to be the exciting part. Palantir Research, what's up? It's going to 11. Look, I hope, man. I hope if it goes to 11, that would be great. Well, what are they going to do with nearly $3 billion in cash? There were some rumors on Twitter that they're buying out a company, and I don't know if that's happening, but there was some stuff people were going through the report. I have to look at it. I would say they need to keep innovating and spending it on R&D to make this AIP platform really good, and spend it on some sales people. Keep giving it to sales and ramp up revenues. That's what I think would be the best thing to do. Inside Emit. Yeah, we are inside today for the market opens. I'm thinking of getting a nice microphone to go outside, and so I could just walk around and talk, because I think those videos would be good, even if it's not like a professional one, like a professionally recorded video. Because I love being outside and doing those videos, and the weather is getting a lot better. My cost basis is 15. Love how there are more people on YouTube now who I've never seen talk negative about them. Things change when the price changes, man. When the price changes, all those people, they're like, it'll never get above $10. Like, everyone has to just shut up, because that's how it is. It is what it is. This is the market. The markets are very humbling. All of us that wanted it to be $50 by now, we got humbled, and all the people that said it's going to be $3, they got humbled. And so the goal is to pick a side, and hopefully you're right over the long term. There's a lot of Palantir YouTube creators who stopped being Palantir YouTube creators because they saw the flack. I just want to say I never stopped, because not only do I always believe in the company, but because I don't want to cover another company. Like, this is the most exciting company in the world to cover. And I still might be wrong long term, but I'd live with that versus, selling out just because of what, the crowd says. Ladies and gentlemen, it is 9:30 a.m. May 9, 2023. Palantir is up 19%, holding 920. The stock market is open. Wake your ass up. The stock market is now open, and we have got GAAP profitability for Palantir. SoFi 536, JP Morgan 135, Palantir falling back down to 906, up 17%. Let's see how it maintains. SMCI 136, Snowflake 159.66, Nvidia down to 288, Meta down to 231, Microsoft down to 308, Amazon down to 105, S&P down to 411. All these companies are down, but barely 0.5% today, but they are red. Shopify maintaining its earnings still about a week later. Very great job for Shopify. Congrats to those shareholders, up at 63.29. Hims had a good earnings yesterday, but it's down 10%. I'm not sure why it's down 10%, but they also had a good earnings. These are the guys that make your dick hard. SLG 21.58, Intel 30.25. We've got Enphase at 161, Google at 109. Google's up today. Wow, Google's passing 108. Apple 173, Square 58, Tesla 169, down a little bit yesterday from about 173. Snapchat 830, Spotify 143. Okay, so Spotify is taking a little bit of a gap up as it's coming higher. Again, on Spotify, I really do not think that the growth story from a user monetization perspective is secure, and I think the market's overlooking that. But Spotify is up. Netflix at 332, Marathon Digital at 950, Boeing at 201, Duolingo at 135. This is recovering from last week at 128. NASDAQ 12,193, so NASDAQ's up. Lululemon 378. Datadog 78. What else do we have? Enovix 13. This is a spec play that we talk about a lot on Finance Junkies. PayPal, their earnings apparently weren't that good, and they were down 5% yesterday, now down 10%. There's a lot of people that think there's a deep value in PayPal. I'm going to ask Chris to do some due diligence on this one with me, because PayPal is one of those companies that I still think is kind of expensive and is being, hit by some of the competitors in the space. So I'm going to ask Chris to take a look at PayPal. Maybe we'll do a deep dive on that. We've got Robinhood earnings today. This one I'm excited about, man. I really love this company so much in terms of their product. Balance sheet is cool. $6 billion in cash, $8 billion market cap. I just think their business model sucks. Payment for order flow is stupid. They really don't have any loyal customers. Their monthly active users decline. But I love the product, and I just wish they could do something that could get us, to better heights. Palantir now down below $9, up 14%. Look, up 14% is still great, but again, there are going to be people who are take their profits. They're just not excited enough to maintain holding the stock. It's okay, it's natural. And if you have to take some profits, I wouldn't mind anyone taking the profits, because you got to take profits. But we'll see. We'll see how much Palantir can sustain this at the end of the day. PlayPal beat, but growth is dying clearly fast. Yeah, that's what I expect. That's what I thought. I really like that video with you outside. Thanks, David. Get a Rode wireless microphone. That's what I'm thinking of getting. That would be really cool. What about the growth rate? Does it concern you? So the growth rate doesn't, and thank you to 297 people being here. Really appreciate it. The growth rate doesn't concern me because of what the qualitative feedback I got from Carp yesterday, right? So when Carp says, hey, we're going to take over the whole market, the demand I'm seeing is unprecedented. People really want this product. When I'm talking to customers, it's not, should I use this? It's how do I use this? I'm starting to believe that management feels that there is a massive adoption of a curve here when it comes to Palantir's AIP platform. Now, remember, they guided for 18% revenue growth year over year, and they're maintaining that guidance. I think that's sandbagging because they brought in 525 after saying they'll only get 503 last quarter, right? So they beat it by 22 million. Now, quarter over quarter growth is pretty flat, but if they can beat that a decent amount, and then Q3, Q4 is when most of the big deals by client. Remember, Q4 is like when a lot of things happen for enterprise SaaS businesses. If we can, I think we're not going to get below 20% revenue growth. I think they issued that as a sandbag, which is fine. If we can just get to 22, 23 and really stabilize the AIP platform, then I think revenue growth is going to be fine. But it's going to take some time. It won't hold because revenue growth was near 18% and trading near a price sales of 10. Yeah, I mean, look, that comment right there by Josh is everything. It's not going to hold because analysts are still looking at the guidance and they're like, yeah, we're giving you a pretty strong price to sales and we don't see the growth. And as of now, they're correct. That's either the greatest opportunity in the world for everyone who believes they're going to grow more than 18% over the next 5 years, because you really understand AIP, because you're really reading CodeStrap's article, which I didn't even do a video. There's so many videos I have to do just breaking down so many new things. Or you think this is overhyped and still overvalued. And that's it. Oh, we had 301. Oh, I forgot the bell. Wait, we don't have 300 anymore, though. It's 290. Oh, my goodness. No, now we have to wait. Hold on. Where are we at? All right, we're at 298. We got to wait for two more people. I can't cheat it. It's only when it's 300. We had 300, but then it went away. Oh, man. Okay. Here we go, 303. Ladies and gentlemen, if you're new to the stream, I am very grateful for 300 because it's not a normal thing. And so we just passed 300 on the live stream. Guys, last night we passed 600 on Finance Junkies, which is crazy. And I know it's because Palantir earnings, but if even some of those people want to come back every day, you guys are witnessing the creation of someone who's trying to make it in media, specifically finance media. And so, it's so cool because when I was younger and I was on YouTube and I was like, I was like 15 to 23 or whatever. And I just watched, I never created. I would see the rise of some of these people actually go from nothing to something. And it's cool to be part of the journey because I remember I was in their chat, I was in their comments. I mean, I still, there's a bunch of creators I care about that I'm talking to every day. And so I appreciate you guys so much. I mean, I hopefully I've said it enough, but I got to keep saying it because it's not possible without you. And hopefully you enjoy, the value you get. And I know I'm not perfect every time. Sometimes you may disagree with me here and there, but hopefully it's a good experience every day. And it just means a lot because it's hard. It's really hard to do this, but it's fun, right? So that's why I never felt like hard work. And when you see, an audience that forms, and more important than an audience, a community. I said this about Palantir yesterday. I don't think there's a community other than Palantir outside of Tesla that is a real community. And name me one stock in the entire stock market where there's a legitimate community around the company. And here's what it takes to have a community. I was thinking about doing a video about this as well. You need a lot of things to go right. Not only do you need people that are willing to put in the content and make 1,000 videos when the stock is dead money at $6, right? You need someone to do that. But you also need, you know, a CEO that's interesting. You need a philosophy to the company. You need technology that can be analyzed. You need all these people like Coach Strap and Sachin and Sean and Chris and all these people that come from different walks of life. They're able to analyze the company. Like, you need so many unique people, and then you need content creators that can cultivate all those people in one place, which is what I think I've done a good job at. And then you need excitement around the overall arc of the narrative of the company. And I think Tesla has that with Elon, obviously, and everything they're doing. And I don't think there's any company in the stock market. There are better short-term plays than Palantir from just a pure financial perspective. But there's no better communities. I mean, I don't even think there's any real. I mean, maybe SoFi is third, but outside of that, but SoFi is just not that interesting enough because it's a bank, right? So at the end of the day, like, yeah, it's a bank. It's really cool, but it's just a bank. Palantir is like, holy crap. Like the PRs we get, the news we get, it's like, this is like a legit thing. This is a big deal. And this is really what matters, right? So I think it's kind of important to just, you know, embrace the community itself. The HIMS community. Berkshire Hathaway community is original. That is a good point, Iceman JJ. That is definitely true. AMC. Well, the problem with AMC is the company has to be a little legit, right? That's the problem. Good morning, Amit. Apura, good morning. Your content is better than most of these YouTube creators in the finance space, still way underrated. I appreciate you, man. It means the world. Okay, let's take a look at this video. A little bit more of a bearish argument for why an economic downturn is inevitable. Let's take a look at this. We've got CPI data tomorrow, ladies and gentlemen. After this video, we'll preview where we think inflation is coming in.
Says that the survey suggests that a recession is probably unavoidable at this point, and the focus is likely going to shift towards the severity and duration of an economic downturn. Joining us right now is Peter Bookvar. He's Bleakley Financial Group's chief investment officer, also a CNBC contributor. And Peter, you look at this realistically, and it was taken at a pretty difficult time. I think it was March 27th through April 5th, was it?
Yep.
And you read into this what?
Bro, why did he say yep like that? Like, did anyone notice that? He's like, yep. I'm just like, bro, you're on TV. Like, put some confidence in your voice.
Had someone telling us that, look, it could have been worse than even the numbers that we saw, but the numbers we saw.
Well, what's unusual about what we're seeing with the banks is typically banks fail or they tighten lending standards after you're already in a recession, because it's the recession that causes the bad credits that causes then bank distress. This time around, it was the very sharp rise in interest rates that created the deposit flight, then tightened lending standards, then created the duration bubble that has now reversed.
Now, what he's saying there makes a lot of sense. When the Fed said inflation was transitory, that's when all the banks followed the Fed and they kept giving out interest, they kept giving out mortgages, loans, etc. The Fed ramping up interest rates at a level that the banks did not expect is what has created the lack of deposits, the lack of the situations where Silicon Valley Bank, obviously mismanagement inside of the company also created that. But the Fed raising rates so unexpectedly on these banks is what screwed over the banks. And, you know, they're partly to blame for the bank collapse.
As we've seen with some of the ones that failed, and then a further tightening of lending standards before a credit downturn has really begun. So this is very different than what we've seen in prior times. And now that we have the credit cycle ahead of us, that tells me with lending standards already tight, they're only going to get tighter. The extension of credit is only going to get crimped from here, and that will, in my opinion, inevitably lead to a downturn and contraction in the economy, which is only growing at best 1% anyway.
Right. And you think that contraction will catch up when? You think it's already happening?
Well, I've looked at the economy in 2023 as two parts, one pre-SVB, one post. And I think that the second quarter is going to where the reflection is going to be in terms of that slowdown. Listen to a lot of earnings conference calls and a lot of commentary about the back end of March into April, business slowing down. So if we only grew 1% in the first quarter with the benefit of a good January, February, to me, it's going to be tough to avoid a contraction in Q2. Even though the estimates are still for positive growth, I think it's going to get more difficult as the quarter progresses.
Yeah, and look, that's fair. I mean, at the end of the day, if we're due for a contraction because we only grew 1% this quarter, maybe we don't have a contraction at a very steep level. But I think that's why everyone is saying like a recession is coming, which is why, again, we made it a big point on the earnings yesterday to say like the Palantir thing that's the rise that's now at 882. At 940, it's euphoria. It's FOMO euphoria. It's not sustainable. Like, I mean, I literally told some of my friends who were like, should I buy it tomorrow? I'm like, no, like this thing is going to come back down. It's not, it doesn't take a rocket scientist to know what happens with Palantir. They just haven't been profitable enough for Wall Street to get in. We need Wall Street to come in, buy the stock, and shut the hell up. And they're not going to do that until they're ready. And then you will have your base, your momentum underneath it, where, forget $9, it might be stuck at 15 for a while once that happens. But that's just not happening yet. And so I would be very patient with buys on Palantir. What I would not be patient with is if you did an earnings strategy or an option strategy and you're up. Like Adam yesterday, he did a short-term options play. He's like, should I let it ride? I'm like, no, take some fucking profits on that shit. Like this macro is not a good macro yet still. There are some opportunities here and there that may be nice. Truist is one of them that me and Chris have been talking about. TFC, I would highly recommend people look into that stock. It's a regional bank that's at COVID levels that probably should not be at COVID levels. But in terms of some of these growth names, they're going to come back to life, like all of them are. And so we'll see what happens with there. Now, CPI tomorrow. Inflation now cast from the Cleveland Fed suggests a 0.5 month-on-month increase in core CPI, perhaps driven in part by rising energy costs during the month. That would disappoint the Fed as it would hold annual inflation at over 5%. Wow. So we think, hold on, they're expecting. Hold on. After this upcoming CPI reading, things may improve on the most recent nowcast analysis. May's monthly increase is forecast at 0.3%, and that compared with sharply rising and could finally bring. Okay, so no, we're expecting below 5%. We're expecting below 5%. Oh, the core CPI that they were talking about for April. Okay, so home prices. The key thing to look at with CPI data is shelter costs. That one has always been messing up inflation. The reason for the disconnect is CPI uses a series of panels to calculate housing costs, which can lag data of at least 6 months. Elon has said the Fed has no idea what data they're looking at. And he thinks we're already in deflation. The Fed meets again June 13th. So so we're going to have 2 CPIs before they meet. Okay, I'm going to go on Twitter actually and see CPI expectations and see what some banks may think. Okay, most banks are saying below 5. Non-core April month over month 0.4, 5, and then 5.5. Let me go to trueflation.com. Let's see what they say. They say inflation is at 3.8 right now. I think we come in below 5. I just don't know if it's enough. Like, is it going to be 4.5, 4.6, 4.8, 4.9? What is it going to be for that to really put a dent in what we have? Food costs still rising, things like sugar that impact a lot. Yeah, I went grocery shopping the other day. I was like, this is ridiculous. Some of these stocks are like, some of these foods are just not good. Sad that the DNA community is dead. DNA never had a community, I think to make a stock to have a community, you've got to have a individual that actually cares to cultivate it. Like at the bottom line, there has to be some content creator that really wants the community to exist and to thrive. And we've done a Palantir weekly podcast for like 70 weeks. It's like there's not many stocks out there that have done that. But also there's not many communities that have a stock where they have stuff to cover for 70 weeks. But also sometimes weeks are slow, so you got to be creative with what you cover. And that's why people say like Chris shouldn't be on the podcast. I'm like, do you know how many weeks there was no news? And me and Chris came up with some bullshit to try to make it cool, and we ended up coming up with like some unique conversation that people found value in. It's hard, man. It's not easy. It is not easy at all. But we got to keep doing it. All right, so we expect CPI to come in below 5, which is going to be good. I don't expect it to be crazy below 5. So if that's the case, then we might see a little rally, but probably nothing that's going to be sustaining anything long term. What else do we have? Let's actually go back into the market real quick and then see what's up. Thank you, 350 people, for being here. Means a lot. All right, so we got Robinhood at 888, Palantir at 885, still up 14%, so not bad. Look, if Palantir can sustain 885 for the next 2 months, I'd be happy. That's it's not the worst thing in the world to be at that level. Look at the RSI on Palantir; it's like 73. See that? So people would say it's overbought. And this is the problem with Palantir. Their valuation is still a little bit iffy, right? Which is why on the technicals they get hit. Their market cap is $18 billion. They need to be bringing in a little bit more than $2.1 billion to justify the market cap. And obviously that means they have to grow more. Microsoft is not dying. Microsoft is continuing to rally at 309. This is a stock I would not buy, along with Nvidia. Like these two they're doing very well. They're not going to do well with my money. I mean, I'm not putting my money there. I'm going to let it relax. And this is the most interesting thing. The S&P is still 411. Like, remember, the S&P at the top of 2022 was 478. Okay, so we had a 478 S&P. We got to a low of 340 in 2022, which is, I believe, a 38% decline. Let me do the math. 478 minus 340 divided by 340. No, 40 point. So it's a 41% decline. Okay, we had a 41% decline in the S&P in 2022. Now we are up since that rate at 411 minus 340 divided by 340, 20%, 21%. So we fell 40% 2022, and we're up 21% from those lows at 411. And we pretty much sustained above 400. Let's just look at the charts. When's the last time? The last time we were at 3 was last day, official date was it was March 27th. So since March 27th, so we about over a month now, we've been above $400. And Q1 earnings by big tech, which is, majority of the S&P, beat on all syllables, right? I mean, like Meta, Amazon, Google, they did a phenomenal job. So it makes sense why the S&P has not declined. But if we see some lower growth going into Q2 and we see kind of this contraction happening, and we don't see inflation coming down as much as it needs to, it might go down. Now, the crazy thing is by the end of the year, this kind of Santa Claus rally might be a legitimate thing this year, because if CPI gets down to 3.5%, getting close to 2%, and the Fed finally pauses, there's a lot of stocks that just might really, really benefit from it. Love you, but your math sucks. Oh, did my math suck on that one? Hold on, no. Did my math suck? It's 478 minus 340 divided by 340. Yeah, it's 40%. All right, it's 40%. We take the top number, the current amount. Oh, wait, no, hold on. Do I have to do it this way? No. Yeah, we take the old amount, old minus new, 478 minus 340. Oh, fuck. I divided it by 340, not 478. Oh, sorry, 28%. That's my fault. You guys know my mom was a math teacher too. This is why this is so embarrassing. It's so embarrassing. Okay, so hold on. So let me do it again. So so 478 minus 340 divided by 478. So we were down 28% last year and in 2022, and we are currently up 411 minus 340 divided by 340. Wait, 411 minus 340. Oh yeah, divided by 411. No, divided by 340. Right? 411, the top number minus the old number. Oh no. That's what it is. We're up 17%. Okay. So that's so we were down 28%, now we're up 17%. That's what happened. Yeah, again, guys, my mom was a math teacher, and this is how bad it is. This is why I'm like a content creator, bro, because I love the art of communication, and like math has never been my thing. Even though my mom loves math, but that's why I was on the debate team and not the math team. And I was a national championship debater, okay? But I was not in the math bowl, that's for sure. Chris. So Chris is in the chat. He sent, this is a use case for ChatGPT. That's so correct. This is definitely a use case for ChatGPT. Okay. Chris put in this in the chat. Regional banks. He gave me a search for regional banks. Is this the article, Chris? This Barron's article? Regional banks look safe. Dividend seekers don't run. I can't read the fucking article, but if this is what you wanted me to click on, this is interesting. Look, there, we got a SoFi ad. Wow, there we go. Regional banks. So Chris has been saying for a while that there are some regional banks that are safer than others, and Truist Financial is the one that we're looking at. Sorry, mistake. Okay, send me a better one. Bro, your math is shit. I know, man. My math it's so bad. Like, and honestly, bro, I felt bad because I was in high school, bro, struggling with algebra. And I'm like, bro, my mom's a math teacher. How am I struggling with algebra? But like, then I joined the debate team, and I'm like winning national championships in like a matter of a couple years. And it's just like, I obviously, naturally just fit into one versus the other. That's why when I tried computer science, I sucked at it, because computer science, you need to have a little bit more of an analytical brain. and my brain is just not as analytical as it is creative. It's just kind of how it is. I'm analytical in a lot of different areas that relate to creativity when it comes to like putting two and two together, when it comes to making an argument and then presenting it. But when it's like pure math and stuff, I'm just like not the best at it. Okay, here we go. Squawk Box, you're seeing a stabilization of deposits at regional banks. This is important if you want to do a regional bank play, and we'll talk about why it's important for regional banks in a second.
We know how sentiment and psychology works and self-fulfilling prophecies. To me, it almost looks like some of the real problems that we've seen already, the banks that are now under, now gone, they were like one-offs, weren't they? They either had huge a concentration of really big depositors, which is obviously different than most regionals, or commercial real estate, and people look for them and they found them. Are there more? Are they beating the bushes for more problems? And are there underlying problems still left?
Well, I think you nailed it. Look at the ones that have failed. They all had higher concentrations in whether venture deposits or crypto or into one sector, such as venture capital. It was a lot of the big issues right now were just on those deposits. The rest of the regional banking system doesn't have that high level of concentration of deposits. And what you've actually seen is a lot of the commentary from the management teams during earnings and subsequently to when they reported is you've seen a normalization and stabilization of deposits. And if you're not seeing the big flows in liquidity, it just seems like right now the bigger issues were the ones that have already failed. And right now you're sort of seeing a stabilization of deposits. And the question is really now becoming one of earnings power, because you're still see deposit costs move higher. Deposit costs mix from non-interest bearing accounts to higher cost accounts. So it becomes an earnings question rather than a liquidity question.
Well, that would be, we could live with that. We could live with maybe a little dampening of earnings if we weren't worried about the existential threat to the bank itself. And let me ask you. So let's say someone beating the bushes sees a bank that's got really mismatched liabilities, but everybody's under 250,000. Can it still be something that they can hit and that people will move their deposits? Does anyone at 249,000 move their deposits because they're worried about a bank? Would there be any reason to do that?
This is a good point. If that FDIC insurance is there, it's hard to decide to move it.
Deposit flow out of there?
Not from what I'm hearing, and not from my experience. I've never seen that actually happen. Now, maybe you do see some. Maybe it raises some questions if a depositor at a bank sees the stock down a lot, then maybe they call up their banker or they go into the branch. But there's no real reason for them to move their deposits at all if they have the FDIC.
So look, the big thing here when it comes to banks is just look, if you want to do a regional play and there's not that many fears of a bank run happening again because deposits are safe. Look, the only thing that fucks these regional banks is if there's a bank run. That's it, right? If there is a bank run because people feel they can't trust their money in Silicon Valley or FRC or whatever, they start moving and they get out of it, the bank is screwed. The bank cannot survive if there's a bank run. If you were to find a bank that is well diversified and is likely not going to have a bank run and overall sentiment around banks is shifting, that's why these shorts had to cover their asses on Friday, because even the report that the U.S. could pass a moratorium on shorting banks. Like, it's so funny if you were shorting regionals, just like, haha, regionals are dying, I'm shorting it. And you have no historical knowledge, which you probably should if you're shorting, on what happens to the sector, and you didn't realize in 2008 they weren't going to let the banking industry fail, and they just stopped you from shorting because the government can do whatever they want because they have guns, and they could do the same again. That one rumor caused these spike ups. Like, where's some of these regionals today? It caused a spike. It caused SoFi to go up, right? SoFi was about to fall down to $3, and then finally the U.S. government was like, all right, SoFi, we'll save you as well. This is why it's scary to short some of these stocks, man, especially in this sector. So let's go to Pac West. So they're down 10% today, but they're up from $2.48. And then we got Western Alliance is down 6%, but they were trading all the way at $7. Now they're at 25. So, I mean, these banks aren't doing the worst right now. Again, the one that Chris and I are interested in is called this one, TFC. We did a whole video on this on the Finance Junkies pod. It was called The Regional Bank That's Not Regional. Truist Financial Corporation. This is a regional that's in the South primarily, but it's the 6th largest bank in the United States by deposits, $420 billion in deposits. Their exposure to commercial real estate is very low, which is good right now because a lot of banks are getting screwed on that. Because work from home is not happening as quickly as you would think it's happening. There's leases that have to be paid. And their main clientele, are 55% of them are small businesses. So liquor stores, bars, laundromats, these people are not going to put their money into SoFi. They have actual cash. They need to put it into a real bank. That's where Truist comes in. And the only way for there to be a bank run on them is if those businesses fail, right? Because they don't want to put their money into a bank. So if those businesses fail, we've got a larger problem with America versus with Truist itself. The last time it was at this level, if you look at the charts, the last time it got to this level was COVID. I mean, this chart is really, it's very, very interesting. It was basically at a range from $45 in 2018 to $49 in 2020, right? So pretty much stuck in that range. And then it collapsed to 21. This was in COVID. By November 2020, it worked its way back up to around 45 and then stayed there until the lowest it got from there was 39. Stayed there until the banking collapse, Silicon Valley in March, and the regionals right here. This is March 3rd or March 23rd, and it collapsed to 25. So the last time it got to these levels was during some collapse. So it's pretty range bound. One could argue, if you do some due diligence, that it's a regional that likely doesn't deserve to be at these levels, even though it is a regional. And so that's the interesting thing to understand. Okay, Chris sent another video. Let me pull that up. Larger banks have a strong competitive advantage versus smaller banks. Okay, let me see if this is on YouTube real quick. See if this is on YouTube, and then we'll play it. And so, and you know, banking, I know banking is not sexy, but as Chris was saying, if there's an opportunity in banking, then it gets pretty sexy, right? Because it becomes one of those things where it's like, well, what's happening in this sector, and why is it happening in this sector? And is there anything, any opportunities that are happening right now that are, you know, really, really valuable because they don't deserve to be, you know, down the way they are. And so that's the interesting one. Okay, let me share this video. Let's share it now.
G7.
The last few days, people have been asking very large existential questions about the regional model, especially in the wake of the FRC deal. Has it changed your view about how or why these firms need to exist?
I would say not. At Oakmark, our view has been that the largest banks have a strong competitive advantage versus smaller banks, and that the natural tendency is for the number of banks to shrink and the big to get bigger. They just have advantages when it comes to regulatory requirements, meeting regulatory requirements, mobilization, fraud control. You know, if you're 10 times as big as somebody else, those costs aren't 10 times as large.
Right. So when we talk about the names that you think are important from a bullish perspective, what are they? Which ones?
Well, at Oakmark, we own a lot of these names. So we own Bank of America and Wells Fargo, single-digit PEs, not much of a premium to tangible book value. In the last quarter, we added Truist after the collapse of SVB and all of the regionals coming down in price. We thought it got to a very attractive level. It's a top 10 bank. Investors are focused on their mark-to-market losses.
Interesting. So they added Truist. They think it's a top 10 bank, and they got to some attractive levels. It's one looking at, folks. It's one taking a look at.
For their mortgage portfolio, both the mortgages on their own books and in securities. But what we think they're missing is that the insurance brokerage business that they have, that they still own 80% of, and has almost no book value. If they sold that at the same price that they did the first 20%, they could cover the entire loss on the mark-to-market of the securities portfolio. And then you'd be buying one of the greatest deposit franchises at tangible book value, which we think is very, very attractive.
Given the fact that we've seen so many of, especially the regional banks, sell off so strongly in recent days, I mean, you're a value guy. Is there a lot more value out there in the sector right now? How are you thinking about that?
Well, right. As things get cheaper, we always think they're more attractive. And I think the differentiation between what's going on in the stock market and what the companies are saying is happening is quite interesting. Most of the regionals came out and said they did not lose assets in the second half of March.
That's a big deal. He's saying the disconnect that's going on with what management is saying in the bank and what the essentially media is reporting about regionals, there's a disconnect. And when there's a disconnect and you have a lot of money and you're trying to figure out how to allocate capital to opportunities, Oakmark is a mutual fund with 51 billion in assets. You might see some opportunities that other people don't see.
March. A number of them have come out recently and said even in April they actually gained deposits, and that just seems to be quite different than what we're seeing in the stock action.
But you do point out that if, for example, your example on Truist, if they found a buyer, right? Isn't the problem this week that there were deals that regulators, for whatever reason, some things we're not even sure why, but deals didn't happen, that there is regulatory friction that's not helping overall?
Well, right, but I'm not saying that Truist would need a buyer for the bank. It's the unrelated business they have, the insurance brokerage business, that we think is highly valuable and effectively is being valued like it's a bank and should be valued much more highly.
That was a good video, Chris. Chris, you be finding these videos, man. You be finding them. All right. Someone said, these old farts need to go. We need new innovations like SoFi. Look, I think this is really discounting what we're saying here, that you want to look at opportunity. It's not about old or new. It's about how do you make money? You make money when you buy low, sell high. And a lot of us throughout the past year have been buying high, selling low. And sometimes you need to find better opportunities. And so it's not about old or new. It's about, is there an opportunity? SoFi right now is not the best opportunity in the market. I would argue that. They're a growth company. They have to grow. They have to become profitable. Wall Street doesn't respect them yet, right? There's a lot of stuff that has to happen, which I think will happen over the next year or two. But if there's some mismatches in the market, it's important to understand those and see if there's, an opportunity to take into account. Chris says SoFi is a bank. Why would I buy it? Second, 2 weeks later, buy Truist. Well, it's about what's undervalued or what's not undervalued. That's the argument. And so that's why. All right, everybody. That's it for me. Thank you all for being here. We sustained 300 over a while. Got some videos coming out today. Finance Junkies will cover PayPal, Robinhood, all the earnings, Affirm. We'll discuss everything tonight, 10 p.m. If you joined last night, please come again tonight and hopefully enjoy for an hour. A lot of Palantir coverage coming this week. Still a lot more stuff to talk about. Let's see where the stock holds up, and we'll keep going from there. Thank you, everybody. Have a great day. I'll see you later tonight.